Good morning and welcome to the final report for 2019. I wanted to take this opportunity to wish all our subscribers, our clients and their families a very safe and happy Christmas, and of course a prosperous new year for 2020. I can't believe we're sitting here at the back end of 2019. The year seems like it's simply flown by. At the end of each year, I think it's really important to sit back and reflect on the year that's just gone and start to think about the year that's about to come. So, 2019, well, most of the headlines are going to be around the strong performance of risk assets around the world. And that's right, it's been an absolute cracking year for equity markets, Australia included, with the markets up more than 25% in calendar year terms. So if we go back and think about December of 2018, that was a very difficult December quarter of 2018. The ASX 200 based out at 54.10 on Christmas Eve. I was in Fiji last year when that happened. This year I've stayed in town, stayed in the office, and of course the market has stayed pretty subdued going into Christmas. So we've come from a very low base in terms of the market, and if you cast your mind back around the reasoning for that market decline was around concern that central banks were raising interest rates too quickly, given the underlying economic metrics that were playing out at the time. So in other words, the global economy couldn't handle higher interest rates, so that was the perception from the market. In early January, the central banks globally tweaked that view from a tightening bias into an easing bias, and the equity markets and the risk markets around the world have rallied very strongly as a consequence. So if I'm sitting back and thinking about 2019, I'm thinking about the really strong impact that interest rate policy has had on risk markets around the world, including the equity markets around the world. So interest rates going forward, I know I harp on it about it a lot, and we write about it a lot in terms of our daily notes, but I think that's going to be the key to getting markets right in 2020. So having a handle on bond yields, on interest rates, the outlook for interest rates going forward. And you've got to remember that markets price things 6 to 12 months in advance. So bond markets are pricing 6 to 12 months in advance. I sit back here at the end of the year and also reflect on the service that Market Matters delivers on a daily basis. After all, we're here for our subscribers and our clients. We write a daily note. We set out and take it pretty seriously about writing about what we're seeing in the market, delivering the insights that we see from a trading desk each and every day. We want to be writing raw content. We want to be writing things direct from the desk. We want to be writing it just as we're seeing it and how we're interpreting the major trends in the market at that particular time. There have been some major trend changes this year, and I think 2020 we're going to see more of them. I touched on bond yields. I think they're really important going into 2020, and that the movements there shouldn't be underestimated. I've touched on the Aussie dollar in a number of reports in recent times. The Aussie dollar is trading around 69 cents. Our non-consensus view as the Aussie dollar continues to track higher, which the market is not positioned for. That obviously has ramifications for the US dollar, or the Aussie dollar is being driven by what's happening in terms of the US dollar. The US dollar has been in a major bull trend since the bottom of the GFC, and I think that's starting to roll over. That has implications for particular areas of assets around the world. So a weaker US dollar is positive for commodities, etc. It's positive for emerging markets and the like. So I think 2020 is going to be a pretty tectonic year of trend changes. I think we've started to see that play out in 2019, and I think that's going to continue in 2020. So if I look forward and to think about how we can deliver that content and that insight to you on a daily basis, writing about our views in an unfiltered sort of way, we'll continue to do that in 2020 with our daily notes. The Market Matters business is going through a major IT upgrade as we speak. One of the things we want to be delivering more for our subscribers in 2020 is user-driven content, allowing each individual subscriber to tailor what they want to see in terms of the content that is going to them. So that's going to be a major development in 2020, along with lots of other bits and pieces. So we've made the decision in the back end of this year to reinvest a significant amount of money back into the business to improve the service and improve the interface that our subscribers are seeing. So as I sit back here and look towards 2020, it's going to be an exciting year from a markets point of view. It's going to be an exciting period for a Market Matters perspective, and I think all our subscribers will be chuffed with the new developments that we're making from an internal perspective. So I appreciate your support through the year. Our business doesn't exist without the loyalty of our subscribers. So again, I appreciate the continued support from our subscriber base. I'll continue to deliver content that's straight from the desk, that's straight from our views in an unfiltered way going into 2020. We'll continue to expand what we do and build on what we do. And as always, we take our subscriber feedback on board and take it very seriously. So once again, I want to wish you, your families, a safe and Merry Christmas. And here's to a great 2020 from all of the team at Market Matters. Bye for now.